Welcome everyone to Business Finances for Coaches. I will be covering basically Business 101 for on the finances side for money management for coaches. So whether you're a financial coach joining us today or a different kind of coach, this is for you. Basically, I feel really passionate about this for a number of reasons, and I will share that. So let's get going. All right, so you help your clients create a plan, whether it's a plan for their health, their finances, their life goals. You help them feel clear and confident. Yet, most coaches I talk to do not feel as confident on the money management side of their own business. And even if they're a financial coach, they're feeling pretty great about the personal finance side. That's why they do what they do. But the business finances side, it often is a different story. So hi, I'm Courtney. If we have not met yet, Cortney Kaveh. I'm a personal finance coach, but also a profit strategist for small businesses, mostly solopreneurs like myself. I've been in business 4 years. It'll be 4 years, April 30th, so coming up here. And I'm a founding member of Powerhouse Coaches, so you might have seen me around. Welcome. And most of my clients are, like I said, business owners, small business owners. I don't work with like huge corporations and stuff, but small businesses, maybe with some employees, or people just starting out. So I've also mentored a lot of other coaches, financial and otherwise, and most of them do not pay themselves first. So a couple of reasons that this happens is maybe they don't need the income. Maybe this is not their sole income. They're told to just reinvest into the business so it can grow, and they just take it too far. There's no guardrails. And maybe they're treating their business like a side hustle still, like it was in the beginning, and they're not sure what it means to treat it like a real business. And by the way, side hustles and side gigs are real businesses. If you're making a profit, you are a business, even if it's property rental or those kinds of things. So their businesses inadvertently acts like a hobby when that was not the original intention. So if they're reinvesting everything into the business, they're not really producing a profit, right? So they're not quite sure what the clear plan is to manage business finances. If you're familiar with Ramsey, sure, we've got the 7 baby steps. We've got a lot of really clear tools on the personal finance side, but what about the business? So that's what I'm super passionate about teaching others about. So here's what we're going to do. We're going to make a plan to pay yourself. We're going to set guardrails around your expenses, stay on top of taxes, not dread tax season, and build a proactive saving strategy to protect your business from fluctuating irregular income. So the way you can kind of think about this is profit first inspired, but I put a much larger emphasis on savings, and I'll let you know why, but that's what I feel like is the key to everything, is having a very solid financial foundation with savings. So I'm going to help you get the right business bank accounts. We're going to learn how to protect our business against fluctuating income, be prepared for taxes, and grow profitably. All right, I have a poll. And you can put it in the chat or unmute yourself. But how long have you been in business? So let's just get some starting numbers here. I would love to see. And I'm going to ask some questions, and feel free to share or not share, but I'd love to just, if you feel like participating, that'd be great. How long have you been in business? 5.5, 5. Yes, I have a feeling we've got a lot of years in this group. 4.5, that's awesome. 1, yay. 9 months. Really cool, guys. Okay, so we have like a wide range of people here, which is great. And I've found that coaches who have been in business a long time or a short time have some of these same things going on. So I know that we can all learn something here today. Okay, spicy question. Do you pay yourself from your business, like on purpose? Heck yes, yes. Great. Not yet. Yes. Okay, great. Awesome. So we're all minimal. Yep. So room to improve. Great. Yeah, I'm excited for you guys who are here who want something more. You want to be paying yourself more, or people who are paying themselves, but I'm hoping there's something new for you to learn here today and refine the plan that you have. All right. Do you commingle? Woo! Okay. Do you commingle? I know. getting a little sassy. Do you commingle your business and personal finances? Slightly. Yeah. No. No. Good. Okay. That sounds like a personal question. Yeah. So do you commingle your personal and business finances? If this is you, and I feel like we've all been there at some point, only because when you start your business, there's this thing called personal capital. So money you put up to start the business. So that's going to be the money you paid for training or to get your email address or whatever. And then after a certain point, you hopefully stop infusing personal capital for your startup capital in the business. And then you let the business pay for itself. And so if you are currently commingling, would recommend, you're going to learn today which accounts you should have, but recommend putting a hard stop to that if you can, and or work towards not doing it at all, only because it is more risk to you if you were to get audited. They look at everything, not if they're auditing your business and you're commingling, they will also look at your personal as well. And that's okay if you have nothing to hide, that's great. But also it's just more liability to you when you do commingle. Plus it's harder to measure profit and all that good stuff if things are mixed together. All right. Yeah, and if you do have accidental commingling, I do every once in a while, just notate it so that if you were to be audited, then you have an account. And because chances are 2 years from now, you're not going to remember what that charge for $4.56 was on October 13th. Like, just write it down somewhere in a Google sheet where you can keep track. All right, so let's talk business bank accounts. So, all right, I'm saying that I recommend 4. However, if you use YNAB, which is an app, you need a budget, you could probably get away with using 1 account. Most people are not on YNAB yet. It is what I recommend to use. We'll talk about that later. You can get away with using 1 account probably because of the way that you can organize everything in that software. However, if you don't use that as your primary budgeting tool, it would be great if you had 3 or 4 accounts. So income, all client revenue flows into here. This is a business checking. Expenses, only expenses are coming out of this account. You are paying yourself a draw from here, meaning that's your paycheck. If you're an LLC, tax treated as an S Corp, payroll will run from here. The last 2, tax savings and emergency fund, you could, depending on how disciplined you are and how much you trust yourself, you could just have 1 business savings. So it could be taxes and emergency fund in there. However, if you really like the physical separation of, all right, this money only belongs to the IRS and the state and it lives over here and it never touches any of the other money, that's great too. 4 accounts is great. If you are an EveryDollar user and you use your budget through there, you probably know that you can't have multiple budgets within the same account. That is one of the reasons I enjoy using YNAB, is because I can have a business budget and a personal budget under 1 roof. And so if I just wanted to put that out there, like, yes, you could create 2 EveryDollar accounts and pay for them, or a free one for the business side and a paid one for the personal, like whatever you want to do, there's options. So let's see. Business, let's see. So tax savings, emergency fund. We'll get into more specific numbers here, but just in terms of the accounts, that's what I recommend. I'll talk in profit first. They talk about a profit account. I will circle back to that and explain why I don't usually keep a profit account. Most of the time I find that business owners do not have proper savings in place first, and then they're funding this profit account, giving themselves a 50% bonus every quarter. That's all fine and dandy, but when their revenue goes down and they're in a panic and they're losing sleep, who cares if you had a profit account? Like, that's vanity to me. You need to have savings first. So profit account can definitely have a place in your plan, but usually people are not starting out with fully funded emergency funds and peaks and valleys funds first. So, all right. So let's break down these accounts. So I talked about an income account. That is a business checking account. This is where your monthly revenue comes in. This can also be where your pay in fulls live. So if a client pays you in full, you can keep this money there and then drip it out to yourself month by month. So if they sign up for a 6-month term, but they paid you in full, you take that net amount and divide it by 6 and pay it out to yourself month by month. Peaks and valleys, this is really the key to the method that I teach, is you must be able to protect against fluctuating income. It happens to all of us. Our income as coaches, our income is not the same every month typically. Income account is a business checking account. The expenses account is also a business checking account. All right, the way I keep track of this is I have a spreadsheet, like a know your numbers spreadsheet. It's in the Powerhouse Coach Collaborative community under the docs. And you basically, I keep track of the monthly income and then keep track of the drip. So if someone pays me in full, I keep track on a spreadsheet how much should come out month by month for that person. We will talk about how to calculate what you should have for peaks and valleys too here shortly. Expenses, so this could be monthly expenses, but then also non-monthly. So a sinking fund is something where you treat a non-monthly expense like a monthly bill and you save up for it over time. And so both of these should be in your expenses account. And this is the main account you actually need a budget for. So business savings, like I said, this can be a general business savings where your emergency fund and estimated taxes live, or you can have 2 different business savings. That's totally fine. So you can keep track on a spreadsheet, how much is earmarked for what purpose, that's fine, or you can just physically have the 2 accounts. So with emergency fund, I'll get into more like the math, like how much should be in each one here in just a second. So hold tight for that. Set up a bookkeeping system. Like I just said, you can use the Know Your Numbers template if you're inside of our community, or you can just create a spreadsheet or use a software. Wave is a great free software, or you can hire a bookkeeper if you don't want to deal with that. You need a budget. So why? Like, can I just have an accounting software? No, you can't. That's what most business owners do. And it is reactive to only have an accounting system in place. Why? Accounting is something, you're accounting for something that has already happened, right? You just have a good record of what happened. That is super important. Like, I'm not saying to not have an accounting system, you do need one, but it is inherently reactive in nature. And so budgeting is inherently proactive in nature. You are planning for what is coming up, not just looking at what has happened. And so there are a couple options. I love YNAB. I already said that. There's also EveryDollar. There's spreadsheets. You can do a variety of things in terms of your business budget. So, but okay, sure. Maybe you've had problems budgeting personally or on the business side because of fluctuating income. What do? I recommend that people plan conservatively for their income. So estimate on the low side. And then if extra money comes in, great, you can prioritize it and put it where it should go. But we don't want to accidentally overextend ourselves in the process by estimating too high. So estimate income low, estimate expenses high. If you have bills that fluctuate, you should be planning higher so that, again, you don't underestimate there. So as I said before, the expenses is the main account that needs a budget, but all accounts need a plan. Like I had said before with the income account, that could be 3 things in there: monthly revenue, drips, and peaks and valleys. So another reason why I really like YNAB is because I can, on one page, make a plan for the accounts and all the expenses, and I'll show you a visual here. So how I used to do this in YNAB is I used to do 3 different budgets for 3 different accounts. I realized that I didn't need to do that anymore. And so I have my business savings account in one line, the income account in one line. So savings is emergency fund and tax savings. And then income is monthly drips and peaks and valleys. So that's all. If I expanded those, that's what you would see. The rest is all expenses. And so I can keep that money separate up here and then just be budgeting my expenses for the rest in one budget instead of 3. So I recently condensed. I also like the reporting features. So you could use YNAB for accounting purposes and budgeting purposes. Another reason why I love it. And so here's what it looks like. Like it will, if I expanded this, you'd see all the sources of income, you'd see all the expenses. It keeps track month by month, and then an average, and then total. So I just pull numbers here when my accountant needs my P&L for the end of the year. I create my own P&L using numbers from this report. All right, next step. You need to decide how much to pay yourself ahead of time. So not, what do you mean? I just pay myself whatever's left. No, we're not doing that anymore. We are deciding on purpose a percentage of the revenue that you would like to pay yourself. So I truly believe this is how you prevent burnout, by paying yourself first. I've seen a lot of coaches just leave coaching in general, and I always have to wonder, did them not feeling like they were making enough money have something to do with it? Were they feeling burnt out? So in the beginning of the month, or we'll talk about flow, but you decide what, as a percentage, what do you want to do? I would start out looking at what you've been doing. So if you've been paying yourself 0%, maybe you inch into it and you start paying yourself 5% and then 10%. Like, it's okay to start small. I would decide on a safe amount that you can dole out each month. And by dole out, I mean pay yourself, say for taxes, put in an expenses account. That's great if you have a bigger number in mind, but you have to start with what's real right now. What are you consistently making every month? And then sticking with that as you build your business. Get an accountant. It was one of the best things I did. Yeah, you're gonna pay a little bit of money, but then you will actually have clarity on how much you should be setting aside for taxes. That was always a huge question mark for me. I hired one, and I pay for tax planning so I can ask him questions all year, but this was the first year where we actually came almost to a net zero of like owing nothing and getting nothing back, except I live in Oregon, so we get these things called kickers. So we got the kicker, but that was separate from like the strategy of saving enough for taxes. So anyway, I was super grateful to not be like overpaying the government all year, or not to owe a big bill at the end either. So that was really priceless for me. And so they will be able to tell you exactly as a percent what you should be saving. So for me, I save 12% towards taxes. I'm an S Corp. It's a little bit lower than you might pay as just a sole proprietor. So that, if you're not doing anything, again, start little. A 15% is a great ballpark number, but this is not tax advice. Ask your accountant. All right, let's put it all together. The whole purpose of doing this, making a plan for your business finances, is to be intentional. It's also going to prevent you from treating the business like a piggy bank, right? See that a lot. Like, bill comes up, I just take money out and I pay it. Like, that does happen. It helps you put guardrails around your spending, meaning protecting your profitability and protecting the ability to pay yourself. I see a lot of businesses who are just spending so much on expenses. I'm like, well, there's your paycheck. It's buried in with your expenses. It's in there. We just got to decrease some of these unnecessary expenses, and then you can actually pay yourself. And it prevents you from reinvesting everything back into the business. I know that's a temptation because you're like, well, I have to spend money to make money. I want the business to grow. Yeah, but grow at the speed of cash and protect your paying yourself in the process. All right, so we're setting up our accounts, and now we're going to do our first payday. You're going to pick a day or days to do a few transfers. You're going to transfer money from your income account to these buckets we just talked about. Paying yourself, which is your personal checking, saving for taxes, and your expenses account. If business savings needs to be funded, you can send a percentage to that as well. All right, so let's pretend it's going to be once per month on the first. This is what I do. I use income from the prior month to pay out for the next month. This does require getting a month ahead if you were thinking of doing this approach, which is, if you can do that, I think this is the easiest because I'm doing the fewest amount of transfers. I was doing twice a month before, and it was just like a lot of work to do all the transfers and then do the budget twice per month. So I like to do it once. So from the income account, let's use these as example numbers. 50% to personal checking, that is your paycheck. This is also called a draw. 15% to tax savings account, you're saving ahead for estimated taxes to pay the IRS and to pay your state if applicable. Sending 30% to expenses account. I include a tithe in my business, and so I'm really spending 20% on expenses and 10% goes to my church. And then you could be building your business savings account. So whether this is emergency fund or like maybe even want to throw extra money to peaks and valleys, that's fine. All right, how much should be in the emergency fund in peaks and valleys? So glad you asked. Emergency fund, I usually say 1 to 3 months of business expenses. You could also just start with $1,000 check, and this could be sufficient for you permanently if you have a really healthy savings on your personal side. You could just probably get away with $1,000 because you're like, well, if something catastrophic happened, I have a large personal emergency fund too. Like, we want something for the business, but with the coaching business, emergencies don't tend to be super, super expensive. There's not a lot of like equipment and machinery and all that kind of stuff. So peaks and valleys. So this is my favorite one to talk about. It's going to be 3 to 6 months of income variance. So what is income variance? Something I made up. It is your ideal income minus your lowest income month. Like, let's say we're looking back on 6 months or 12 months. What's your ideal income month so far that you've had? Like, ooh, I earned that much that month, and that was really great. Like, that's ideal for me, versus your lowest month. So that one minus that one, you have your number, multiply that by 3 or 6, just depending. That way, if you have a lower income month, you are pulling from it on purpose. Let's say January is historically low for you. Great. Instead of taking a smaller paycheck, you just pull on purpose from that peaks and valleys fund. That's what it's there for. 3 to 6 months, it really just depends on your comfort level. How much do you want in there? What do you feel like your risk is? Think about the peaks and valleys versus emergency fund. Expected changes in income, unexpected expenses. Okay, expected changes in income, we pull from this on purpose. Unexpected expenses that pop up that we will need money for. All right, I know you guys have some questions. I saw some things popping in that I didn't get to yet, so I'm going to open up this for questions. Did all this make sense? What questions do you have? And Suzanne or Sarah, if you saw any questions, could you shout them out?
Yeah, Joe was asking about what budget lines and sinking funds experienced coaches use. And so I piped in some of mine about Jotform and my digital phone line, and then some other things that I pay annually.
Yep. So Joe, I pay as much annually as I can because usually there is some cost savings there. So if I pay it in full, I will then set up a sinking fund to stay on track to pay it in full for the next year coming.
Yeah, that's smart.
Yeah. What else?
I like the reduced mental load that goes with that too, because then I'm not thinking, is this valuable every single month I pay for it? You know, it becomes more of an annual review of like, okay, was this valuable this whole last year instead of just the feelings that I'm having that month?
Yeah, exactly. I'm looking up some things too. So like for me, renewing the business license, the LLC, the S Corp, let's see. Yeah, just any annual expenses. That's mostly what I have sinking funds for. Paying the accountant, stuff like that. Yeah, good question. What else?
One of the other categories that I think is a high for me, and maybe not for other people because I have my podcast. So I have a category called apps, software, and web services. And the only reason I call it that is because that's what QuickBooks calls it. So in order to be consistent with my accounting software and my budget, like Courtney said, two different things, I have them labeled as such. And so my StreamYard account, my Buzzsprout account, which is the thing that pushes out it into a podcast format. StreamYard's what I use to record. The Buzzsprout pushes it out. Those are under apps, software, web services. So if you guys are paying for a verified Facebook account, if you guys are paying for LinkedIn Premium, all of that kind of stuff would go under apps or software, web services, or whatever you want to call it.
Mm-hmm. Yeah, absolutely. Yes. What other questions do you guys have? I'm just putting up a reminder of our next happy hour that's happening on March 7th, and then also Sarah's deep dive. Very excited for this one. I really need some help here. Lights, camera, coach. We'll have the registration links in the chat for you. Let's see, any other questions? Hopefully you guys learned something new. I know this takes some work to get put into place, but what you're doing for yourself is starting to prioritize paying yourself first, operating your business profitably. And operating your business profitably is what is going to allow you to pay yourself and keep paying yourself first, and then have sufficient savings in place so you can protect that long term and not burn out, not quit. A lot of times business owners will stop doing what they're doing because it was just easier having the 9 to 5. They can't deal with the fluctuating income and the emotional roller coaster that comes with that. And so this is a solution for that. All right, guys. Well, thank you so much for coming. I'm gonna stop recording and you guys can stay on here for a moment if you'd like. Thank you so much for being here.